Hi everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Friday the 4th of February. Now it is Nonfarm Payrolls Friday today, but markets have been driving through the legacy of a significant number of volatility events we've had throughout this week. We've had yesterday just the ECB coming in with a hawkish surprise and driving euro-dollar significantly higher. We've seen a load of volatility through the NASDAQ as well, which is still impacting through equity markets today. So the markets are now going to be focusing on what the non-farm payrolls report could be throwing at us. Well, the expectation is for 150,000 jobs, but the potential is for a downside surprise at that, and maybe even a negative number. However, what we are seeing is a load of volatility that is likely to still continue to play out through markets in the coming hours into the close of the weekend. So this payrolls report is obviously going to be the main focus of today, and we do have a slight focus also on the Canadian jobs number, but ultimately that US jobs report is going to be crucial for major markets. So the charts we're looking out for today, I've got that euro-dollar chart with the fact that we've seen a significant move higher in the last few hours, and it continues to run into the European session today. We're also looking at a breakout on the oil price as well. A lot of volatility coming through yesterday afternoon, but this comes at the end of a week where we've seen a considerable consolidation. So is this the next breakout that moves the market higher once more? And finally, looking at that NASDAQ chart, again, a lot of volatility, and what is the outlook for the strategy? So let's have a look. Add onto the Infinox MT5 platform, and obviously we've got this euro-dollar chart which has had a lot of volatility. Look at this recovery that we've seen throughout this week, down from where we were around about the 11 big figure mark, just above that, and we've seen a stride higher. We really have seen a huge move higher, and backed obviously by that ECB meeting yesterday and the acceleration higher. And the sort of technical implications of this is ultimately not decisive yet, because that key resistance overhead of 1480 is still in place. But what we'd be looking out for is the likelihood is that the euro is now starting to build a new sort of outlook above that 1370, 1350 area of support. This breakout area that market took so long to get through, which initially moved and then unwound. But I think the breakout that we've had on the back of this euro-dollar move yesterday, where the ECB went on a hawkish tilt in the press conference, really does sort of change the ball game potentially. So we've got the technicals which are now testing this 1480 level, and above that is we're looking out for 1525, I think, on this chart. But I think that we're now starting to we're now going to see a new paradigm developing, a new basis of support forming. But it'd be interesting to see how the market responds to this move, because obviously it is overbought near term. You could see a pullback, but then we'd be looking for support to form, and the likelihood is to be putting more pressure on this resistance overhead. On the oil price, we've seen the uptrend in the last few weeks, about 6 weeks or so, consolidation in the past week, and it looked yesterday at one stage as though the oil price might be sort of falling over, and these momentum indicators were falling over. But the turnaround that we saw yesterday, strong bull candle, a really strong breakout actually, and it's continued today, and it really does look as though the market is now pushing towards that next level, which is essentially, well, I mean, it's $100 really on this chart. There's no real resistance overhead for many years, so $100 could easily be seen on this Brent Crude oil chart. And you now look at the 4-hour chart to see, well, in terms of pullbacks, near-term pullbacks from an overbought position, maybe you see that pulling back towards that 91.20 breakout. You've got a good support, I suppose, around 90 big figure really. So anything above 90 big figure in terms of a support area is likely to be seen as a buying opportunity now for oil. And finishing off on the NASDAQ, well, we've seen a whole huge amount of volatility actually intraday, after hours trading. We saw a sharp sell-off yesterday intraday, but then we had the Amazon results that saw NASDAQ rebounding strongly overnight, and it's not really sort of decisively moving on from that, just holding that move actually. But it certainly still looks, I think, in a negative outlook, considering we're still underneath what is, I've now put in the resistance of that rebound high, which 15,250 area, which essentially is bang in the middle of what is now going to be seen, I think, as a long-term range on this chart. And I think that that's going to be the case, that NASDAQ is negatively configured underneath that resistance, but is starting to find a bit of support. But can it move on? Can it find that buying pressure that really does sort of engage that move? Well, the initial resistance, if I go one more level here, you can see them on the hourly chart, 14,867. And that is the initial resistance. And move above that, and you could start to see the market moving towards that resistance again. But it's just pulled back lower again, and there is still a little negative configuration on that hourly chart. So just still a concern that. But that payrolls report is going to be very important again for volatility, I think. Thanks for watching the video. I hope you found it informative for your trading. I'll be back on Monday, where we'll see where the dust is settling in the wake of that payrolls report and where the markets are looking for the new trading week. So I'll leave you with the Infonox support and resistance table, and I will speak to you then. Thank you very much and have a good weekend, everyone.